right. Welcome to Finish Line TC Services' first video ever. I have my partner here with me, Jay Holder. Woo, Jay! um, so he's my partner. We came together to, establish Finish Line TC Services. So, welcome, Jay. Can you tell the audience a little bit more about our company and what we do?
Yes, our company is, as Jibber said, Finish Line TC Services. We do any and all transactions on the creative side. So we do everything from transactional funding to Subto to vehicles. Um, there's not anything we haven't done in any of that realm. So
Awesome. So we operate in all 50 states, including Puerto Rico. We get many questions as to where we operate. And yes, all 50 states, including Puerto Rico. And I'm actually possibly going to be TCing a deal in the Dominican Republic. And I think Jay is too. You're working on a deal as well. So
yeah.
awesome. So if you guys have anything, just send it our way. But this YouTube is actually going to be a little bit of multiple things. So number one, we're going to go over some like commonly asked questions when it comes to creative finance. We're also going to do some story times. As transaction coordinators, we get a lot of weird transactions and some very sketchy things. So we are going to be bringing on special guests onto our podcast, which is going to be very exciting, very cool.
Oh, yeah.
I've been on podcasts myself. Jay, you've been on podcasts before as well, right?
Yeah, quite a few. Yeah.
Yeah. So this is going to be very different because now the roles are going to be switched and we're going to be the ones asking the questions.
For sure.
All
Definitely
right.
different.
Yeah, it is different. So let's just, for the people that don't know what creative finance is, can you talk a little bit about that just to give people an understanding and a basis? Because, I mean, let's face it, I think a majority of our clients, they do Subto transactions. They're an investor, they're either a Gator lender, private money lender, lending on these type of transactions. So can you just tell the audience what that is?
Yeah, so there's multiple different types of transactions when it comes to creative finance. So we have subject to, which is where we take over a property. We go in, we give the seller a little bit of money to get them out, make them comfortable, and then we take over their property subject to where we are paying the note. So we take over, they're the bank, and we make sure we make their mortgage payments. Generally, you should do that through a servicing company so that it can help to reduce their DTI and things like that if they want to buy a house in the future. It's not a requirement, but it's usually the right thing to do. Then you have the other side, which is seller finance, and that's usually a piece where the seller owns the property outright, and they're going to go and they're going to finance it to you at a monthly note for however long you agree to. Generally, we try to get no balloon, but you know how that works is we sometimes have to have a balloon, which is where we have to make a payment at the end of say 5-10 years where they get completely paid out. And then you have a hybrid, which is a mix of that. It's where there is somebody who's got a lot of equity in their house. They want to sell it, but they know they can't sell it for the price they want. And so you may go in and offer them what they want. You may take over that little bit of mortgage they have subject to where you're paying the bank. And then you make a payment to the seller on top. And that's considered a hybrid. Once you buy in those ways, once you buy a property in those ways, you have different exit strategies for that too, right? So you could decide to rent it, you can decide to sell it, you could decide to do what's called a wrap, which is where you find an end buyer who wouldn't necessarily qualify for a traditional loan, whether that because they have an ITIN number, their credit, they had bankruptcies, things like that, and you would sell it to them at a higher interest rate than the current prime. And then you're going to make money on the interest rate. Plus, you're going to take a 20% usually down payment for them to even get in the house. So you really make all of your upfront and money back in that down payment, and then you collect money on top every month. And it's a great way to help people want to get into a house that may have had something bad happen, because we all do. It's life. May have had something happen that's impacting them from getting a place, and you can help them get into a house. I personally have done all of them, Subto, seller finance, buying. I've sold on a wrap. I've got 2 houses right now that are sold on wraps that are performing great. I've got one that's renting, and I've got one that's going live as a sober living. So when you talk creative finance, the gamut, there's a gamut of things you can do. And then for our other type of investors, right? It's the money investors, it's the private money, it's the Gators from Paces Group, the EMDs. And those all have their own tricky thing, but essentially the earnest money deposit is what we're giving all our wholesalers. You do get buy and holds that they need EMD funding. That's a different story. We'll get into that later in one of our podcasts. But you have the funding of the EMD, and then you also have like private money lenders, which are people who are going to get back, give you money to close or for rehab or things like that, so that you then pay them back when you refinance or you flip it or you sell it. And then you also have the third one is private money partners, which is ones you bring in, you give them equity in the position into the house. They come in for the long haul. They're in there, 1, 2, 3 years with you. You try to get them their principal back in monthly payments, and then their own part of the property generally. And so lots of ways to do creative finance, and then vehicles are the same way. You've got Subto, you've got seller finance, you've got a hybrid, you've got lease options, you've got assumptions of leases. There's all kinds of things you can do with vehicles too. So creative finance is exactly what it says. It's creative finance. You can do it any way you want to. You just got to figure it out and make it creative.
Telling me you've been doing this without telling me you've been doing this a long time. So
For a while.
that was like a brief overview of what creative finance is, in like a short, 2 minutes. So there
Yeah.
are so many different things that can be done. We are not teaching this, right? We're not here to teach creative finance. So let me just preface that we are not teaching it. We are solely just going over this as transaction coordinators and some of the things that we see on a consistent basis. So
No.
our mentor is Pace Morby. Some of you may know him. He's a freaking multi-millionaire doing these deals on a consistent basis. He's awesome. If you guys have not joined his community, definitely join it. It is a life changer. There's so many different things that you can do once you join, the Subto community. We've actually that's where I met Jay.
Yep.
We met each other in Subto. Um, Jay was actually part of his Gator program at first, and then he transitioned over to Subto. And we actually met each other because I was only TCing not traditional creative deals, and Jay was doing transactional. And he slid into my DMs. No, I'm just kidding. That sounds weird, but he did. He sent me a message and said, "Hey, how can I bring value?" And we connected, and we actually taught each other how to TC. So, I mean, what better thing can come out of it?
Yep.
There's so many great things, and we've been partners and friends actually because it's turned into a friendship for over a year now.
Oh yeah.
Yeah.
Yeah, it's
So,
definitely good. Our families have met. We've hung out. We went to Kalispell
yes.
together. We'll be in Squad Up Summit next month together. So, and then hopefully we'll have our company retreat in Puerto Rico sometime this summer. So it's gonna be fun.
Yes.
It's been a
So
fun time.
for some of you guys that don't know, my husband, his name is Irving Cortes. And he's also a Sub 2 student, and he runs the Puerto Rico Sub 2 group. So we are having a meetup in June, and that's where like investors are just gonna go hang out and network. I mean, networking is key, especially in this space. You have to network with people. You have to be active. I can't say that enough. That's where you're going to find your private money lenders or your private money partners to, come in on these deals with you guys. Because, like Jay had mentioned, you're getting into these creative deals with little to no out of pocket expense, meaning you don't have to have 10 grand sitting in your pocket to get into a Sub 2 deal. My husband and I have properties in Connecticut, Virginia, and Puerto Rico. And it's not like we're freaking sitting on boatloads of cash because we're not, right? And your credit does not have to be excellent to be able to get a mortgage because that's not what this is about, right? We're talking about taking over someone else's debt. Like, who does that? We do.
Yep.
So I get this question quite a bit, and I know you do too. Is this illegal? Is creative finance illegal?
No, it's not illegal. It's definitely it can be frowned upon by like the mortgage companies, right? Because they have what's called the due on sale clause in there, which says they essentially want to be paid off if the property transfers hands. But you don't have to necessarily do that. You are going to deed it over from one to another, but you're not impacting the mortgage company at all because you're still paying the mortgage. Due on sale does get called very rarely, but it does happen. And so if that does happen, we have things in our contracts and our agreements that allow us to work with the buyer and the seller to help them solve their due on sale and get around even that being called. Because at the end of the day, banks don't want to foreclose because they have to
Mm-hmm.
spend money to do that. As long as you're paying the bill, right? As long as they're getting their money they want, they usually don't want to. Now, when you talk smaller banks, that's a different conversation.
Right.
Because they can kind of want that property and try to resell it for however much and make more money. But when you're talking bigger banks like your Wells Fargo's, your Mr. Coopers, those bigger entities, they're not usually going to call unless you're not paying on it. So
Right. Exactly. Now, have you ever experienced that?
as a personal investor,
Yes.
no, I've not had due on sale clause called yet. Knock on wood. Not because I'm scared to do it. I just don't want to do it. So I will, but I don't want to. And so no, we haven't had that. We have had properties that we were my other business partner, my other venture where we do buy and holds, where he had lent some money on a property, and the person that he lent the money to as a PML did not do what they were supposed to do, and the property almost got foreclosed on. So we had to go in and take it over, wrapped it to an end buyer. Funny story, that end buyer was already living there, already doing maintenance on it, but had no closing, had no title, had no nothing.
Oh my gosh.
So it just worked out that they were good people, and we like working with them, and we were able to get the property from this person who wasn't doing what they're supposed to do. Please don't do that. Do what you say you're going to do, or give the property back to the seller. Don't not tell them. But anyway, we got lucky. We were able to take it over, and we were able to make everybody's dreams and wants happen, as you say. So it was good. How
Right.
about you? Have you ever experienced it personally?
I have not. I have not experienced it. Knock on wood, because I don't ever want that to happen. But like you said, if it does happen, we know how to take care of it. It's just the
Yeah.
hassle of going through it that I want to avoid. So
Yeah.
same thing, like
Absolutely.
you said, we anytime we're dealing with a property, if we're gonna take it Subto, some of the things that we're looking at is it a small bank or is it a major bank? Right? Because if it's a small bank, a credit union or anything like that, we're not going to take it. We're just going to stay
Right.
away from it just to decrease our chances of the due on sale clause being triggered. And I will say, I have not even had one person, not one person has told me that they've gone through it, except Pace. Pace has mentioned he has gone through it, but he has done so many deals that I think he's only had it triggered like a handful of times.
Yeah, I think in all the talks and everything that he's done, I think I've probably counted up maybe less than 1% on his transactions. Even if it's that, it might be like 0.5%, right? So it's
Mhm.
really negligible when you think about how many deals he does. And those are the deals we know about. We don't know all the deals he does, and we're not supposed to know all the deals he does. But just the ones he talks about, you just know. I have had one client where the due on sale was getting threatened to be done, and that's because both the client and the seller called the bank and told them what was going on. Because again, it was a property that the borrower was not doing what they said they were going to do and paying the property. So the property was getting the due on sale and foreclosure at the same time. Um, we tried every way we could. This was a local bank, and that local bank would not. The due on sale didn't matter because they were foreclosing, and so they would not do any of the normal stuff. They wouldn't even let her sell it. It literally had to be show up that day with cash to the bank, or they were gonna sell it at auction, and they did sell it at auction. And there was nothing that the borrower could do to the lender. I'm sorry, that was trying to take the property over and sell it and try to recoup some of her money. There was nothing she could do. And I tried to help her multiple times on it, and there was zero chance because the bank themselves said no to everything. We
Yeah.
tried purchase contract, we tried all of that, and they wouldn't do it. And so It was one of those bad timing things. And again, they had told them that what they had been doing. So don't do that. If you're a seller, don't let your seller call the bank and tell them anything. And that's one thing that I get all the time when we're doing it. And we're telling the seller, like the seller's like, well, we need to let the bank know. No, you don't need to let the bank or the mortgage company know anything. We're going to keep in the bill as investors. We're going to do it the right way. You don't have to worry about letting the bank know anything. They do not need to be involved.
You know what's funny? Like people are always worried about, oh, well, creative finance and oh my God, the bank, like, you mean I can't call the bank and let them know what's going on? But I think about it, I'm Puerto Rican, and there are some really old school Puerto Ricans.
Oh, yeah.
And so this stuff like this has creative finance has been around forever.
Oh, yeah.
Like people like back in the day, I'm telling you, I'm talking about old school Puerto Ricans would be like, hey, I have this house, I can't pay it anymore. It's just sitting there, I'm not doing anything. Can you just take over the mortgage, keep paying it, and do what you want with it? Like
Yep.
it was the norm, but now that is becoming very popular, people are like, wait, people can actually do this? Yes, you can. People have been doing it forever. Do you think that a bank is going to say, Jay, you're going to pay Jennifer's mortgage? No, we can't take your money. That would be
No.
crazy.
Now, the only time I'll say that, obviously they're going to want to do that if there is, if you're getting like a 2% interest rate and the interest rate's up at 9% again, like that's where you start to see some of those, because the bank theoretically is losing money, right? Because they could just take the house back and then turn around and resell it for the same price you paid for it, but at a 9% interest rate. Which is why we buy Subto, right? We don't buy the property, we buy the interest rate. And as long as no cash flow in one of our exit strategies, or if our strategy is to have a high house, low payment with a negative cash flow to offset taxes and income, then maybe that's a strategy too. But we really only chase the interest rate. I know, we see buy boxes all the time, less than 5%, at a time, those started coming hard to find in general. And so you started up in that, right? Because when I first started a year ago, it was less than 4% or less than 3%. And then as prime went up and numbers went up, inflation and all that, it became less than 6%, less than 7%, because that's where the market was at the time. Now the numbers have come down. I forgot what it is today, but they've come down to not pre-COVID, but they've come down, or right after post-COVID, they've come back down better than they were. And so people are, I think there's going to be that shift in that housing market where there's going to be a lot of houses available to the end buyers, but there's not going to be enough buyers. And that's going to be good for us in a way.
But you know what? I feel like, so, I'm a real estate agent, and I feel like in this market, there's more buyers, less inventory. Now I'm talking about traditional real estate, right? I'm not talking
Yeah.
about creative finances. So I think that honestly, we won't run out of buyers, especially like there's going to be an extremely high opportunity for rep buyers. Just
Yes.
because it's going to be extreme, and it is now, right? It's extremely tough for people to get approved for mortgages. And not just that, they're not getting approved enough to buy a property because the properties are freaking ridiculous. They want
Yeah.
an arm and a leg.
Well, yeah, I mean, that goes back to the interest rate, right? With the interest rate being so high, and then, people bought into houses that they got to get out of. So there's a lot of low equity, right? So that whole shift around COVID money and all that, when people were able to buy a house, literally, it's like 2008, right? When they were able to just go buy houses because we were approving everybody. Now they can't afford them, right? And they have low equity. So if they try to sell it for what they owe on it, they end up losing money. And that's another good thing for us, is like, it's helping them out. We come in, we help them out and give them some money so they can move, they can do whatever they need to do. But we're taking over a low equity house because they would lose money. They would spend money to sell. One of the houses I have, I think it was going to cost them like $14,000 or $15,000 to sell it out of their pocket. That's what they were going to pay. And we came in and gave them X amount, took it over. We wrapped it 2 months ago. We're good to go. They're good to go. They're getting it paid. So they were happy. They got some money. They got their house taken care of. We're good because we're making a monthly on it, and everybody was happy. And that's kind of the goal of creative. It's not a get rich. It's
Mm-hmm.
literally how can you help people out of their situation, or how can you turn that creative finance into a positive situation or helpful of people. So one of our properties is going live at the beginning of April for sober living. Right? I would, I really try to help. I'm part of a discipleship group. We help a lot of recovering addicts and current addicts. And one of the things is how do I take what I'm learning in this mentorship and with what I'm doing in business, and turn that into helping people. And so that house we have in Texas is going live, like I said, in April. It'll house 16 people. It's a huge house.
Wow.
Um, and it's a minimum amount of what we could collect on a per bed cost, because I do have an operator, but he agrees, like, it's not about getting rich. It's about being able to turn that house, help people. But then at the same time, what can I do with that funds? Now I can go fund another one and another one. And, my goal is to help anybody who needs help, not just, recovery, sober living, but we've got homeless veterans, right? Like, they're all over the place. Your husband's a vet, or will technically he'll be a vet when he retires
Mm-hmm.
soon, right? So
Yeah.
he's a veteran. Then we've got families that need help with transition, domestic violence, women, that need transitional housing. And so how do we help all those people? And that's my goal. That's my mission that I've been given in life, is to help as many people as I can live somewhere where they have a roof and some warmth, and they're not worried about getting arrested for living there. That's my goal.
Yeah, that's awesome. I love that, Jay. Like, I've been thinking about the sober living or like assisted living. Like, I've been thinking about something like that. We haven't gotten into that just yet because that's something that like we still need to gather a little bit more information. But
Yeah.
I just wanted to point out really quick, we're not your average transaction coordinators, right? We are investors ourselves. So we actually see it from your perspective as well. So we're not someone that's just going to come in and just say, okay, this is the process. This is how we're going to do it. Send me the paperwork and we'll handle it. We are coming in with another perspective. We're another set of eyes, you know, someone else that can bring our experiences to the table, which is
Yep.
extremely important. And I think that that really makes us stand out from maybe a lot of other transaction coordinators that are out there. No shade to anybody, but I'm just saying that that experience helps because we get to understand the deal from an investor perspective.
Yeah, we're more of, we're not just pushing paper. We're more in our area. We're more of the engineers trying to help you figure out, would we invest. So every deal, every client I ever have will tell you, I tell them what I would and what I wouldn't do. It's just an opinion. It's a thought. It's my opinion and my recommendations. I'm gonna do what you want as the client within reason. We do have a risk tolerance. We do turn clients away. We have turned many clients away where the deal was just too risky, and it's because no matter which way we cut it, it wasn't going to be without a major risk to either the seller or the lender or whoever. And so we do turn those away. But yeah, I think that it helps that we are buyers, we are investors. We do understand how to underwrite. We do understand comping. Those are services we offer, but we kind of do it when we take a deal on, regardless, because we need to make sure that you're protected. So, yeah, that's one of the big things about Finish Line, and that's what we, as we bring on TCs, that's what we try to teach them. And like you said, no shade to other companies. There's a lot of great TCs out there. We've
Yeah.
worked with them. We work with a lot of them, and they're great. It's just, that due diligence and making sure that you're secure is the best thing. And this is what I've told many clients. This is like, you don't have to use me. You don't have to use Finish Line. You don't have to use Jennifer, but use somebody and make sure you vet whoever you use very, very thoroughly. There's a lot of things going on right now that I see where even TCs are doing it wrong. And that's an opinion. Okay. Again, opinion. But they're trying to hurry up and push deals through, and they're not looking at the security. And there's a long thing on Facebook where I posted about this, just trying to give a PSA to people, like, just make sure you're checking in these things. If you're, make sure you're getting everything in writing, what you want done. No sugarcoating and no saying, oh, we'll cross collateralize the property. and give an address. But what does that mean? What does cross collateral mean? It means you're getting notes, deeds of trust, mortgages, personal guarantees. You're getting all that against both properties, the subject property and the cross collateral property. Spell that out in the JV agreement. Make sure that title understands they have to get that done. In this case, somehow that wasn't, when I had them spell it out, it changed the amount they were going to spend on documentation to be created, which makes no sense because you stated cross collateralization, meaning all this had to be done anyway. So I didn't ask for anything new for my client. Luckily, I don't think my client funded it. So she did fund it through me anyway. So unless she funded it around me, which is fine, that's her prerogative. But if not, I hope she did. And if she did, hopefully everything's good and she's taken care of.
Yeah. And so there's this program where transaction coordinators can get certified. We are certified. We are top tier certified, trained by Molly Tennant, who is Pace's very own TC and partner, because she's partnered up with him on properties as well. So it's very cool. So get yourself a top tier certified TC, and definitely get as much information on them as possible. Everyone is different, right? Everyone's process, the way they do their work is different, and that's fine. There's nothing wrong with it. Like Jay said, there's many, many great TCs out in the community, and we love them. And we always love to assist in any way, shape, or possible. But that is very important. When they are top tier certified, we are following the process of how Molly Tennant teaches it, who is Pace's TC. And aside from that, they get consistent support, which you never have to worry about. Like if they're stuck, if they don't know what to do. I will say, guys, every deal has its own nuances. So don't think that every 2 Subto deals are going to be the same, or every PML deal is going to be the same, because it's not. It is not. And this is one of the type of positions where it's consistently evolving. Things are always changing and we are always learning. Jay and I, we're not experts. We're experienced, but we are not experts. And we are consistently learning. And we are not taking the place of an attorney. We're not taking the place of a title company. None of that. We are just simply assisting in the process. So that's another disclaimer that I should have said from the very beginning. We are not attorneys and we're not replacing your attorney, because I get that question a lot. So why do I have to pay an attorney if you're going to? No, completely different. We are facilitating and assisting in the deal getting to closing. I tell people this all the time. Title or the attorney, they're there to make sure that the deal gets to closing. Okay? But it doesn't end there. Guys, it does not end there. We, as a transaction coordinator, are facilitating the process and making sure that you have a great post-closing experience. What does that mean? So we are going to be there to make sure that there's paperwork in place to make sure that you're not chasing the seller after the deal closes. Do you really think that the seller's going to answer your calls after they've closed? They got their money, they're done. They're like, bye. Bye, Felicia. Bye. So our job is to make sure that you have a great experience even after the deal closes, not just when you get to the closing table. So keep that in mind and keep doing Subto deals. Don't be afraid. We're going to be doing many, many more videos like this in story times that will help you guys on your real estate journey. So make sure you guys like, share, and subscribe. Bye, guys.
Bye.